Can you see my screen?
Yes.
All right. So, good evening, everybody, and welcome back to another weekly class. For today's class, what is my focus going to be on? First of all, if you were active on the group today, you realize that most of the boys, I don't know, maybe plus the girls, we're doing a lot of synthetic trades. I saw volatility 10, I was it 10 or 10S, then I saw 50 as well. And then I went to my chat, that was in the afternoon, to check out the B10. I think I even checked out 20 and 50 as well. Let me see if I have it saved. So I went to my chart to check out the volatility 10. I think I'm currently on the trade, which is this one, which is this current one, right? Now, if you check to what happened, the price got to, let me see, it's, if I have the file saved. Okay, yeah, this was it like around this afternoon, all right? And then back to dairy. If you check what happened on this particular setup, first of all, you realize that it was more like a confirmation on this leg. All right. When price mitigated this entry, what happened? It just was created this next continuation. All right. That what I had to do was take out this high, and then at the end of the day, took out this one, presenting you with a re-entry opportunity that did what presenting with what an inducement that pulled back into 50%. All right, this is the inducement level. Okay, that pulled back into 50%, making this zone a valid zone to what click and take a buy position from. All right, but then if you notice what happened on this particular setup, this is my target, of course. This was my target for this one, like for this one too now. It's more like the internal high here. This was my target for this one. Now this is my target for this one. But if you notice what happened now, this is my stop loss. If you should take your 50% from your stop loss to your take profit target, you'd realize that as at this point now, no stacking level has been formed here. Let me see 30 minutes to make sure I'm correct. All right, you can see 30 minutes now. The only point now is this engulfing that price created, which you'd still be waiting to see if it pulls back into give you what your first stacking point. So probably there's a stacking point here, but it's here to be what mitigated. And if you look at what happened here as well, right? For this particular setup, this created only what one stacking level, which is this one here. All right, for this first 50%. Now, that's why I was trying to explain to you when I talked about volatility 10, 10S, 25, and 25S. This is how it's always going to be. The way that price runs on them, it runs in a bullish way. Maybe a bit slow, but then it moves without retracement. If that POI is valid, you're pretty sure that when price mitigates, you hardly experience drawbacks. Hardly, right? We experience drawbacks or price coming to your entry, coming back. And then the disadvantage of this is the fact that it may not now give you what enough starting points. So if you are going to be taking for those of you that I think I saw that most people, I don't know who brought this trade idea in the first place. When I was going to the trade idea group, I saw that a lot of people had this POI, right? So which means that some of you that are already executing would have been on this setup. And those of you that are yet to start executing should at least be what be monitoring this setup or something just like this. And that's why I talked about when I was talking about the importance of communication as a group, as a community, right? Somebody notices something and then the rest of you what get to learn from it, get to interact, get to get on with it. All right, not just this, even me, just by going through what was happening in the group, that was why I saw this trade. I wasn't even looking at synthetics in the first place today. All right. But then I saw somebody trade idea. I went to check my account and I was like, oh, this is very good. And what happened? I come here, I dropped out my POY and all of that, and then I was execute. It wasn't my trade idea. But because I'm in a community where people are active and contributing, I get to what also make money off it. All right. So even if you wake up in a day, you see what you can do for your mates. You guys go over it. You look at what other people do. Just contribute. All right. Just contribute. That's how you learn. For people that are not currently on this setup, they are probably what going to see what is happening and get to what learn from it. All right. Now, my emphasis on this particular setup is the fact that this is how most of these players are going to be. I mean, for 10 minutes, 25, 25 minutes, I think those are like the four major fast run pairs. Do you understand? So for pairs like that, if you're lucky to see a starting point close to your entry, or at least just stack at that level. If at all, just budget for probably one starting point, because most of the tests may not even give you any starting points. All right, the test may not even give you any starting points. And then I noticed something as well. If you look at what happened when price approached entry, instead of giving, say, one of our bullish confirmation candlesticks, if you look at what happened when price came to entry, it actually gave what a bearish candlestick, which is what a pin bar. This is like a red flag. I noticed someone on the group as well talked about it, which is very, very smart. Your confirmation candlesticks are important because this is volatility 10 that played out. But then you can have a POI and then you see this pin bar and then price continues to the downside. So the moment at which it gives you what this big bullish engulfing candlestick, that is when you've gotten your confirmation, not the pin bar, not this one. You need to see a candlestick that gives you what a rejection. Just like if you look at what happened on this one now, we had what a bullish engulfing, right? Which is way better. And if you look at this now, this is what happened here. A bullish engulfing candlestick was created, which is what one of your confirmation candlesticks. But you need to see price do what close above your entry before you say that it's a valid point to buy from. Synthetic is very crazy because it has like crazy volatility. And as much as you're doing any of your thing, it is very important that you're paying attention to risk management, which is one of the most important things in this trading. You would be surprised that for a trade like this that had like almost a zero drawdown, if this was currency pairs now, what would you say that this particular setup did what? This was a snipe or whatever, or there was what a zero pullback, something just like that. All right. If you look at the particular setup now, you realize that okay, just on mitigated entry and started buying. It didn't really pull back into the POI, which on currencies will be something very sweet. But you see on synthetic, you see this movement here that came back here, that came back here. A lot of people would have taken losses. All right, it's a different ball game. It is highly volatile here, whereby the pullbacks, those things you're seeing as it's just one peak, it's just this, it's just that, it counts crazily over here. So you need to make sure that your risk management game is tight. All right, you see, whatever is happening at your entry, that's your first entry point. Whatever you're doing here, make sure that your risk is calculated at every point. Make sure that your risk is calculated, which means that when you've executed and you go to your MT5, let's say you want to risk $5 on the setup, right? And you go to your MT5. Let it be that when you tap on that your chart on MT5, that it is when price gets to this level that you're losing that $5. This level that you're losing that $5. Let's not be that when price pulls back, let's say price comes into this place, mitigates to this level before continuing. That's when you're losing the $5. That means your risk is what? Your risk is not calculated. So at every point, you want to make sure that what you're not gambling, except it's the whole idea of flipping 50-50. But once it's you trying to take a trade that you want to have an edge on, all right, you don't have to lose money on a winning setup. A setup that is still going in your direction. There's no excuse why you still shouldn't be on that trade. If you feel it's capital issues, they don't execute. All right, because the chances of you winning and chances of you losing is still the same thing. If let's say at this level now or minimum lot size, you're going to be losing $5, but on your account you have only $2, then there's no need executing that trade. You probably wait for what another trade that you can afford to do that on. Okay, because what if price has to pull back? Let's say the mitigation was not just at this level, price has to pull back. Because I think my entry was even refined. Let me show you something. As at the point that I saw someone say VIX 10 as triggered, I was not on the trade already. Okay. Now if you look at this now, somebody mapping out the entire order block, that's from the beginning of the candlestick, not just the body. Just like this. I hope you guys can see what I'm doing. All right. Now this is where I mapped out this one here now, using the body and this hidden demand zone at this level. But then somebody mapping out the entire bearish candlestick, which is still correct. All right, something just like this now would have been triggered before mine. And if you look at what happened when price triggered that level, let me take this out, please. When price triggered that level, this was the point at which that level was triggered. Yeah, this was the mitigation level, yeah. And then what happened? After the mitigation, it started buying, right? And then price pulled back to mitigate my own level. All right. So what I'm trying to say is that even as my level was mitigated, it would have been very possible that price still does something just like this, like pulling back into my own entry. All right, like pulling back, let's say, instead of just mitigating at this level and continuing, it would have done something just like this, maybe getting to this level before it starts buying. All right, so you need to budget for all of these things. You cannot always have snipes. There are times that price will consolidate around your entry. So whatever you're doing, you're making sure that you're not going to be taken out of a trade until price will hit your stop loss. That's the most important thing, that you don't get stopped out or surprise will stops you out. Let it be that the moment that your MT5 does that of closing all your trades, that means that your stop loss on your chart has been hit. If not, you're overstacking. And this is at entry level. The only excuse why you should even overstack if you're doing the whole flipping stuff is that you're already in crazy profits. All right. Not with the little money at entry you're trying to use to. Do you understand what I'm saying? Not the little money at entry that you're trying to use to pull that kind of game. All right. And if you go to I think 50, although I didn't execute 50, I was just watching. Was it 50 or 50 years that person did? Let me see. I don't know if it was 50 or 50 years, but then I still saw you guys talking about one of the 50s. Okay, this is one. It's 50 years, one of the 50s. Now, if you look at what happened here as well, it's looking more like type B, all right? Because the inducement was created before price broke out of the 50%. All right, before price broke out, that was when the inducement level was created. But then even after that, price still came back to create structural liquidity. So more like your sweep here at this level, your break of structure, and then price pulls back to break structure again at this level. All right, giving you structural liquidity, but then we still have this particular investment here. But if you look at what happened now, you can see that the movement on VIX 50 is very different from the movement on volatility 10. They are both different. 50 can give you enough starting points, but you hardly find something like that on 10. Now, marking out from this level to this level, just like this, your starting levels are going to be what in the first 50%. Of course, price has even gone above 50% now, so you cannot even be looking out for any starting levels. But then let's look at what happened on this particular one now, 30 minutes time frame. Now, when price mitigated entry, the first thing to notice is the fact that price closed above the entry with a hammer candlestick, all right, which is what your confirmation that this is what a valid setup. You've had a setup that met all of your criteria. The first thing you want to do is that when price mitigates entry, you want to see a bullish intent or a bullish intention. that okay, buyers are what actually in the market. And if you look at what happened, the price was mitigated entry and gave you what this sharp rejection, which is what your hammer candlestick. This is the level at which you start what buying. That's your starting at entry. That's the cheapest you're going to what find price. Or you're starting what reasonably. All right. And then continuing, price came back. It didn't even give many continuations on 30 minutes. Probably if you go back to 15 minutes, that's when you would find starting levels at this point. This demand zone, then this demand zone. But then it's not something I would have taken because I told you your starting should not go below 30 minutes so that you won't be trading the noise. It's probably just this particular market condition that you're having fewer starting points. But just so you're guided, do your thing on 30 minutes, 1 hour. Instead, you budget for what? Just one starting level. But don't go below 30 minutes when you're starting so that you don't get caught up in retracements on those lower time frames. All right. And then for the last trade, I think the last popular trade that almost everybody took was this AUD USD. I took that as well. All right, which is was still the same thing. If you look at what happened as well, we were in a bullish trend on the 4 hours time frame. The 4 hours was what bullish, where you have price do what? Price took out this supply zone, right? Price took out the supply zone and then came back to mitigate this level in like a flip zone. I told you when a level is being taken out just like this, if you see what happened here, the price took out this supply that was a mitigation to the other one, to this one, all right, just like this, and then came back to mitigate this flip zones. Although I already taught you how to avoid flip zones, right? And then, but then the flip zone in particular was an order block, right? A valid order block, which you would have been skeptical about maybe. But if you look at what happened, price now mitigated this level. I told you if you're not going to be trading pattern, if you're going to be trading candlestick confirmation, you can see that when price mitigated this level on the 1 hour time frame, it gave what a candlestick confirmation, which is this bullish engulfing candlestick. All right. Now, for those that will be trading candlestick confirmation, probably you would have looked for your continuation after that. But then on currency, I told you that pattern confirmations are what way better. So waiting for your pattern to form after the mitigation on this demand zone, what happens next? Price did what? Swept liquidity with the mitigation, then went ahead to do what? To break structure internally. The moment price took out this lower high, we had a break of structure. And then what happens next? We had what? Another break of structure at this level, with price even taking out the external high before retracement. All right, before retracement, and then mapping out your 50%, you realize that what that the inducement level pulled back into 50% at this point. All right, so your inducement is intact. If you see again, we had what imbalance just before entry at this level. All right, your engagement is intact, your imbalance is intact, it is in line with this trend. You have what you have your break of structure, you have your what else again? Your sweep. All right, and this is a mitigation to a previous demand, more like pattern confirmation, order flow. You can see the continuous chain of demand zones being formed, right? Continuous chains of demand zones, levels mitigating levels, placing levels mitigating levels. This is what order flow. This is a perfect, this is what you call an A plus setup. There's no reason why you shouldn't execute something just like this. This is A plus, perfect one. And then what happens? You put what your entry and the target just like this. Price comes mitigate. And even when you have an entry just like this, if you go to the 4 hours time frame, I told you the most important thing you do when you don't analyze on the 1 hour, you go to the 4 hours with the recent trend. In this case now, this is the recent higher low. You move up from the higher low toward the higher high. To make sure that your POI is in what is in the first 50%. And as you can see here, the point of interest actually did what? Made it into what? The first 50%. You can see it here. This is where the 50% got exhausted. So something just like this now has met all of your validation. This is how you analyze. You need to make sure that any setup you're taking meets all of your validations. I don't like it when I see setups on the losing groups and it's disappointing setups. I had to ask someone today, I said, what are the confluences for you to take this trade? Like, why did you take this trade? Because looking at the setup alone itself, it's not the fact that you took a loss, it's the fact that that was not a setup in the first place. I told you, always go through the winning setups that people drop. There's a lot to learn from. These things are, to be honest with you, they are patterns. They just have backstory behind them, but then they are patterns. And the thing about patterns is that they are recognizable. They are things that you can memorize and draft out. It's just like somebody telling you that this is how to write A. And then you already understand that this is how to write A. You've looked at this, you've seen the person write A like this. Although you're going to need to only write A where you're talking about A for apple or spellings that have A. But when you need to now write a spelling that has A, you can close your eye to do what? Mark out something just like this. And that's the same thing with these setups. They are patterns. Their patterns means that there are things that you work on what you can easily vet your work with. When you don't analyze it, ask yourself, this thing that I've done now, does it look like my type A or does it look like my type B? Whenever you do a setup, it should look like either of the models. If it's not type A or type B, then it should be a reclaim block. Either the reclaim block 1 or 2, depending on whether it has structural liquidity or not. All right, something just like that. Like there are things that was easily vetable, things that you can cross-check yourself. So there's no reason why you should be taking losses that can be avoided. There's absolutely no reason why. For this month, I think the synthetics have been giving really good setup, except for the fact that stacking points have significantly reduced. I noticed that as well. All right, but then that's been giving what pretty good setups for even at least for those of you that are still learning. It is a good opportunity to see things to forward test with. Even currencies as well. I won't lie to you. I think this April was the best month ever for currencies this year. January, was it February? February was not so good. You could literally wait and wait and wait and wait and you settle. Well, April was the month that I saw at least 3 trades weekly on currency pairs. It was the best month for currencies. And Nelson would affirm to this. Most of the people at like a star would affirm to this. It was one of the best months for currency pairs. So it's something good because you get to forward test with these things. You go to your chart. You see people that are dropping before and after. This is them forward testing. And it's something that you can do as well. There's no pressure to execute. You literally just finished your course a few days ago. So there's no pressure to execute yet. Allow yourself to study. Allow yourself to learn. All right? Forget about putting money in the market yet. There's enough time. This is just May. And which is like I think the second month of Q2. We still have another month and then 2 more quarters to go, which is like over 6-7 months, which is a lot of time. There's no pressure, to be honest, or even 8 months, I guess. All right, there's no pressure, so you need to calm down and do this thing right, so that you don't get losing. Like you don't start. I'm not saying that losses are not in this market. There's a lot of losing opportunities. Even when you think you did everything right and you still take a loss. All right? But then at the end of the day, you need to have what a striking win rate that would encourage you to still execute after taking a loss. If you're sure that, okay, in 10 trades, you can make 7 wins, even if you take a loss today, you would want to execute tomorrow because you have what confidence in your edge that you would recover. And that's the only reason why you're here. For that type of confidence. So I want you guys to give yourself enough time to study. For those of you that are not attending the live class, always go through recordings. Always go through what is happening on the group. Participate, contribute. Look at what your mates are doing. Most of those people you see there, they are literally just learning trading for the first time. And some of them are not learning for the first time. So there's a lot of people to take a lot of things from. There are things I could probably may have overlooked. Do you understand? Probably you said something and I didn't say it. But then somebody else corrects you. Look at what they're correcting you on. Ask yourself, okay, like when you drop, even I'm just encouraging, and now I'm encouraging you guys for people that drop setups on the losing group. If somebody corrects you that, oh, why did you do this? Don't look at it from a perspective of they're trying to do the whole superiority thing. You understand? Taking corrections as well. Even if I'm the one, there was one boy that I was trying to correct on something, and then he goes, I don't know how to listen to this voice notes now, or something like that. You need to be open to corrections. That's the truth. Even as I am like this now, I can literally just set up and then I have someone asking me, why did you take this now? Boy, then it's bearish on this, it's this and that. And then I start reevaluating. Do you understand? So it's something that everybody is susceptible to. But you need to make sure that as much as possible, even if you're still learning, to cut down on your losing setups and on your losing trades as well. Contribute on what's happening on the group. Watch, also learn from what others are contributing. Just make sure that your all is there. All right. And then for I think our next class, that's the Saturday class, I want to focus on synthetics. This starting point especially, right? I just want to review starting point and stop losses again. Considering the fact that that previous class we had, network was disturbing, and then because of more examples sake, you see the way we did, we were focusing on currencies for today's class. For this particular class, we're doing more of currencies as examples before we got into synthetics, all right? So I would like us to like choose a synthetic pair and then go through the trading opportunities, starting points and all of that. I think that's what we'll do next week Saturday. And then somebody was asking about recommended broker and corporate for crypto. I know a couple, I don't know, the most popular prop firms are for currencies, that's the Forex currencies. Hardly do people make prop firms for cryptocurrencies. But then I think I know of Pop W, and then I don't know if CFT has all of the crypto pairs. So just give me tomorrow to research. By Monday, I should get back on the announcement group. Just to make sure, because you can trade crypto on even deriv, but my issue is spread, so that you don't start registering losses because of spread. All right. So I'll just check how the spread on these cryptocurrencies, on these problems are, and then the available pairs on it, and then I'll revert. For brokers as well, I'll just look for one or two and then get back as well. All right. But then you guys can use the most popular one for Forex currency, which is XNES, if you want to do personal account. They also offer Naira accounts. For me, I take Naira account on HFM. All right. So just for them to be safe, you can use XNES for now. For the top firm, I'll get back on Monday. All right. So if you have any questions, you can ask on the questions of topic and keep it system. You can always drop questions there. I think every day I try to go through it and answer questions as much as I can. If your questions remain unanswered after a while, just tag me to it to bring more attention to it. For those of you that are already doing well, I urge you to please carry other people along too. If somebody asks you a question, don't look at it from a place of who are you or something, all right? If it's something you can explain, just explain to the person. If it's not, allow me or any of their admins to intervene. But then understand that you learn from teaching as well, right? Teaching emphasizes. So if there's something you understand and somebody does not, or we set up somebody jobs and you think, okay, this is a very obvious mistake, right? Feel free to put the person through. At the end of the day, everybody's goal here is to what? Is to make money. All right. I think for next week, literally, I think very soon, I should start dropping my own trade ideas as well on the trade ideas group. All right. I should start dropping my setups there as well. So let's just make this a one community, everybody going, learning, and earning at the same time. All right. So this is where I'm going to stop for today's class. For the slow learners, I was hoping to host a class later this week for people that are not catching me. So if you think there's a topic you don't understand, you like me to re-emphasize, you need more examples on just anything, you can go to the slow learners group and just drop it, all right? So that I would make a compilation and then choose one day of this week before we meet again to go through everything again, all right? And then if you have questions, subtopic, please use the specific subtopic for what they are for. Nobody should, the person that sent the question to the solution group, you said that I deleted it, all right? If you have a question, use the question subtopic, your winning trade on the winning trade subtopic, losing trade or losing trade subtopic, chat and discussion for what it is for already, achievements on the achievement group, and then all of it for what they are for. So I'll see you guys again very soon. Until then, take care of yourselves. Don't worry, I'm very active on the Telegram as well. So we're literally still with each other until the next class. But take care of yourself. I would have Stan upload this recording before the night ends. See you guys soon.